Welcome back. You're still tuned into Halftime Report. Precious metals continue to rise this year, with gold rising to a 7-week high recently, while silver holding steady around record high levels. Philip Newman, Managing Director at Metals Focus, tells my colleague Manisha Gupta that silver could hit $70 an ounce by next year. Let's listen into a piece of that conversation.
From our point of view, we are still bullish on silver for next year, even at these levels. We think that it could approach 70 next year. I realize maybe that doesn't look so far away from where we are today at about $62. But I think the important thing from our standpoint is that, given how quickly it has risen over the past few days, I don't think it'll be a straight line rally to that high that we see for next year. As you know, it's a pretty small market. A lot of volatility can happen. So we think that you could see, in the short term at least, perhaps a correction. But I think any correction could well also be, quite short-lived as well.
Philip, how are you also looking at the buying part of it? Because now this year clearly has been about speculative buying, short squeeze even, and then industrial demand, everything played up, including the supply deficit. Is it going to be a similar story next year?
Well, I think, it's quite possible that we will see at times the market remain tight. We are looking at the dynamics, how that's playing out in London. We've seen the resumption of ETF demand that will contribute to that tightness. But as you know, the Indian market has backed off. We're in a small discount at the moment. So that isn't taking silver from London, as it has been quite recently. So on the other side, that helps to ease the tightness. I think from an industrial standpoint, that's one we're keeping a very close eye on. Something like the photovoltaic market, which, as you know, is the single largest area of industrial demand. I think at these prices, that will be encouraging panel and module manufacturers to really perhaps ramp up their efforts to thrift on the use of silver. So I think that will still be a very good figure next year in terms of demand, but I think it could ease back from where we are at present.
Philip, also when it comes to the overall price volatility, that seems to have gone higher as well. As you mentioned, that India markets have seen a bit of a discount, but India also seems to be looking at almost the same number as last year in sense of imports. So would you say a 6,000 tons perhaps is a given right now?
It's possible. I think it's just to see how the market reacts. As you know, the price today is about, I think, 193,000. But we saw, during Diwali, there was buying into 200,000. But I think, as we've now moved past that, it'll be interesting next year to see how consumers react to these prices. We know that Indian retail investors tend to be naturally quite bullish. So will they be buying into the rally? Or will there come a point where they think, silver's had an incredible run, successive highs, maybe it's time now to book profits. And I think if that happens, then that maybe will be a question mark over the imports that we've seen recently.
Let's talk about gold then, and Philip, and we've seen 4,200 kind of be a number where it's pivoting around, consolidating even for the last couple of months. What is it that you think is going to be the future trajectory for this?
Well, given what we said about silver, then part of that is, it's further strength in gold. And you're absolutely right, Manisha, in terms of the prices consolidating. We would take that as a very strong positive, that the market is very comfortable from these levels. And again, even if we see a correction, we would think that will be short-lived, that will be bought into. And so we are positive for next year. We still think that gold could eclipse 5,000 before the end of 2026. Many of the factors that have driven prices this year will carry on into 26. And so, we're looking, a more dovish Fed after, of course, their cut yesterday. Question marks about Fed independence. And all that, of course, feeds into that moves about dollar negative, gold positive as well, plus diversification arguments, and there are a few other drivers out there. So I think we still feel quite comfortable with our forecast, as I said, beginning with a 5 for 2026.
Oh, well, yes. Philip, also when it comes to gold therein, the physical buying has been strong here too. Next year, apart from all the macros that you mentioned about, what do you see in sense of physical buying, whether it is about institutional, again, retail and the central banks?
Well, I mean, if we start with the central banks, the first 9 months of this year, the total was only about 13% lower against the first 9 months of last year. And last year was, close to a record high total. So I think for the full year, we could be looking at somewhere between, say, 800 or 850 tons. That is an exceptionally strong performance. And I think for 2026, we do think that central banks will still remain on the bid. So in terms of the price support that provides, the positive sentiment, I think that's certainly something we're looking for. I think for a driver, though, in terms of the upside of that 5,000 I mentioned, then you are looking for that continued institutional stroke hedge fund play to be there in the market.